procedures under customs. In this procedures under customs, we have lot of things, import procedures, export procedures, etc. and all. So I am taking it for some time and then we will take the lunch break. Okay. So see the import procedures. You can say this because after lunch break you will not listen this, I know. Import procedures, and this first we need to see what is the procedure for import by vessel. So there are total 12 steps that is involved. First, what importer, exporter, who are the people involved? Exporter, customs officer, importer, master of the vessel and port trust authorities. First, exporter will hand over the cargo to the shipping company outside India, and the shipping company will give a document of title called as bill of lading. That bill of lading will be sent by the exporter to the importer to prove that importer is the owner of the goods, and this shipping company will bring the goods to India. The master of the vessel will enter into India and they will be filing import manifest, arrival report and import manifest they will be filing. As soon as they file this, customs officer will be giving grant of entry inwards. Okay, come, you can enter into India, and thereafter the master of the vessel will deliver the cargo, unload the goods to the port trust authorities, and thereafter the master of the vessel's job is done. He will prepare the ship for export, and now importer will come into picture. Importer will file a bill of entry with the customs officer, say bill of entry for home consumption, and customs officer will verify the bill of entry and will approve the bill of entry, means an acknowledgement will be generated. Once the acknowledgement is generated, so then the importer has to pay the customs duty. Only upon payment of customs duty, customs officer will pass a out of customs charge order. This is which option? Option 1, imported goods cleared for home consumption, and thereafter importer should also file delivery order, like importer should give the bill of lading to the master of the vessel, because master of the vessel, being an agent of the shipping company, will understand whether this bill of lading is true or not. So thereafter the master of the vessel will give a delivery order to the importer. Now delivery order means he is the owner of the goods, to whom the goods should be delivered. Out of customs charge order means they paid the customs duty. So these two orders, that is delivery order and out of customs charge order, they need to give it to the custodian. Who is the custodian? Port trust authorities will be the custodian, and they will release the imported goods. These are the 12 steps that is involved in this case. Now whatever we discussed here, in these import procedures, so whatever procedures, these are all common. Let it be airways, okay, let it be airways or waterways or roadways, mostly this procedure will be common except for few changes. You can see that all the import and export procedures under customs are through customs common portal. So the GST portal is, GST also we have a common portal, customs also we have a common portal. GST common portal is gst.gov.in, whereas customs common portal is ICGR.gov.in. So Indian Customs Electronic Gateway. Then in case of import by aircraft, suppose if the same process import by aircraft, what will happen? This bill of lading is there now. Wherever we see bill of lading, that bill of lading will be replaced with one term called as airway bill. Then in case of imports by vehicle, then the same, this bill of lading will be called as railway receipt or lorry receipt. Then in case of aircraft and vehicle, grant of entry inwards is not required for arrival but required for unloading goods, but they need to submit the arrival manifest and import report for the purpose of unloading the goods. Already we discussed what are the various documents involved. What is the document involved? What is the document to be filed by the person in charge of the conveyance? In case of vessel, import manifest. Arrival, arrival manifest. Vehicle, import report. When the import manifest and arrival manifest should be submitted? Before arrival. Before arrival itself they should have submitted that, at any time before arrival. And import report they can submit after arrival also, but it should be within 12 hours. Within 12 hours after arrival. These two, how it will be filed, sir? So will the person in charge will come, park the vessel, swim and come and file? No. So they will file electronically. We have electronic filing, and that electronic filing will be through ICGR. And suppose if it is practically not possible to do electronic filing, then proper officer will permit them to file manually also. In that case they will have steamer agents in India. Those steamer agents will be filing on behalf of the person in charge. Principal commissioner may allow manual filing, and vehicle will always be manual. Suppose if they file late, what is the penalty? Always in customs, remember, the penalty will be up to 50,000. up to 50,000. GST we have a number of penalties, but the moment you see customs, in MCQ only it will come. Customs penalty 50,000, that is the answer. You understood? Got it? Always. Sometimes what they will do, they will not give 50,000, they will give 49,000. You don't think your option is not there. 49,000 is also up to 50,000 only. You understood? That is also correct. So for belated filing, penalty up to 50,000. Then see this, who is person in charge? Master of the vessel, already we know in case of vessel, pilot in case of aircraft, and driver in case of vehicle. What is the place of arrival? Where they need to come? Only at the approved place only they need to come. What is that approved place? I told you not all airports and ports are approved. Only some ports and airports are permitted for import. In that place only they should come. Customs port in case of vessel, customs airport in case of aircraft, land customs station in case of vehicle. However, for vessel and aircraft it is allowed to land at any other place if compelled by accident, stress of weather or other unavoidable reason. Then next, so file passenger name record information. Maybe some terrorists also can come into cargo ship, and through the cargo ship as crew they can enter into India. Many movies we have seen, no. So that's the reason why they need to submit passenger name record information along with import manifest, arrival manifest, import report. Belated filing, penalty up to 50,000. In case of import by vessel, goods can be unloaded only after obtaining grant of entry inwards. This already I told you, it's a repetition point, only for vessel. And goods as soon as it is imported will go into the custody of one person. Who is that person? Called as custodian, and they shall ensure safe custody. Suppose if pilferage happened at this stage, who will pay? That custodian only will pay. Only goods specified in import manifest, arrival manifest or import report should be unloaded. If any other goods are unloaded, it is called as smuggled goods. And goods should be unloaded only at the approved place, and it should be unloaded under the supervision of proper officer. If it is, like supervision of proper officer, if the officer is working during after office hours or public holidays, etc., they will charge some extra charges called as merchant overtime charges. This merchant overtime charges collected by them is exempted under GST. Exempted under GST. In GST, we have exemption with respect to services provided by government to business entities. In that, we have list of 14 specific exemptions. In that 14 specific exemptions, one exemption is merchant overtime charges under customs. So this merchant overtime charges is exempt under GST. There won't be any GST on this. Then sometimes what will happen, for unloading the goods, they will be requiring some small boats for bringing the goods from the ship to the shore. For that reason, they need to get a boat note from the customs officer. Say this, for unloading goods, if small boats are required, then he shall obtain a boat note from the customs officer. Should we remember these sections? None of these sections you need to remember. You should not remember all these things. If you remember this, then GST you will leave. Got it? So this is not required. This is just the provision we need. Here and all, don't focus more on section numbers. So section numbers up to the valuation chapter you need to remember. Okay, and thereafter, so I will tell you which are the important section numbers. Here you don't have to focus on the section numbers, but provisions you remember, that is sufficient. Then compliance to be followed by the importer. So for whatever we have seen is the compliance to be followed by person in charge, that is this heading, whereas compliance to be followed by importer. All imported goods should be unloaded and shall remain in the custody of custodian, who shall be responsible for imported goods till clearance. If such goods are pilfered, custodian shall pay. Already we know that. Bill of entry shall be filed. So this bill of entry section alone you remember, that is section 46. Section 46 deals with bill of entry. So bill of entry shall be filed electronically through ICGR, and we have three types of bill of entry. Bill of entry for home consumption, when the imported goods are to be cleared upon payment of customs duty. Bill of entry for warehousing or inbound bill of entry, when the goods are stored without payment of customs duty under bond, whereas export bill of entry for home consumption, when the goods are cleared from warehouse upon payment of customs duty. And what is the time limit for filing bill of entry? Minimum, that is when we should file, before the date of arrival. And can we file even before that, like 10 days before, 20 days before, 30 days before, 40 days before? No, only within 30 days before, only within 30 days before the date of arrival. So 30 days prior to the date of arrival, which means the validity of a bill of entry filed will be only 30 days. Within 30 days, if the vessel or aircraft is not coming, then again we need to file a fresh bill of entry. That fresh bill of entry only will be relevant for the purpose of determination of rate of duty, exchange rate, etc. and all. It's not amendment of bill of entry, it is filing a fresh bill of entry that is happening here. Then late fee for delay in filing bill of entry, already we know for the delay up to 3 days 5,000 rupees per day, for the delay beyond 3 days 10,000 rupees per day. But what is the maximum late fee? If it is exempted goods up to 50,000. So therefore, if there is a delay by 30 days, but these are exempted goods. For exempted goods also bill of entry is required. Yes, every goods bill of entry is required. So if there is a delay in filing bill of entry, even we need to pay 30 days. So if you see first 3 days 15,000 and thereafter remaining 27 days 2,70,000, should we pay that much? No, just 50,000 we need to pay. What if it is dutiable goods? Either this late fee or 100% of customs duty payable, whichever is lower. So subject to maximum 100% of customs duty payable. And the person in charge will file the details of import manifest, etc. and all. So this person has to file it before arrival, not before grant of entry in words, before arrival of ship, etc. And they have to pay the customs duty after filing bill of entry for home consumption, and customs officer will pass out of customs charge order when the customs duty is payable. And how the customs duty is payable? How the customs duty payable? Electronically. When the customs duty payable, either two options are there: immediate payment option or deferred payment option. This immediate payment and deferred payment option is below, which you can see. Immediate payment option and deferred payment option, which you can see in page number 258. There are two options for payment of self-assessed duty by the importer. 258. Immediate payment option, deferred payment option. Immediate payment option means on the date of filing bill of entry itself, they need to pay. For example, today morning 9 o'clock I have filed a bill of entry, and somewhere like 11 o'clock it got approved. Then immediately I have to pay the customs duty by today night. Otherwise, from tomorrow onwards the interest will start. What is the rate of interest under customs? 15% per annum. Okay, that is immediate payment option. Suppose sir, by like somewhere afternoon I filed a bill of entry, night only it got acknowledged, and now I need to pay, but the banking is not working. What should I do in that case? That's the reason why they brought in electronic cash ledger regulations. In that electronic cash ledger regulations, what they are telling is that you deposit the cash. How much ever customs duty you need to pay, you know that. So you deposit into your cash ledger, so that once a bill of entry is acknowledged, directly the money will be taken from the cash ledger, so that you can avoid the interest. That is the objective of this cash ledger regulations. Then, so deferred payment option. Deferred payment option is like as soon as you file the bill of entry and you have selected the deferred payment option. Deferred payment is given to all? No, only to authorized economic operators, AEO scheme. Under foreign trade policy there is something called as AEO, authorized economic operator. And so these star holders, there are some star holders are there, like star status. Depending upon their star status, they will be given certain benefits. For these two people, you can see, just turn little bit FTP. So in that you can find authorized economic operator. For that authorized economic operator scheme, there is this. So preferential bids. In that preferential bids, page number 278, preferential bids, you can see for authorized economic operator, what are the benefits? You can see deferred payment of customs duty. So they don't have to pay customs duty immediately, they can defer that customs duty. Also, there are some status holders. So if you see these status holders, these status holders also will get various benefits in that. Okay, so preferential treatment and priority in handling. So the preferential treatment includes deferred payment of customs duty. So these two people can opt for the deferred payment of customs duty. If they opted for deferred payment of customs duty, when will they pay customs duty? If the bill is returned from 1st to 15th day of any month, due date is 16th day of that month excluding holidays. For example, if the bill is returned from somewhere like, say for example May, we will take, because May is a very good month for us. So between 1st to 15th May, if there is any bill that is filed, then we need to take the 16th working day. Between 1st to 15th May, so there are only 3 days, 3 holidays. What is that? May 1st, May Day. May Day is a public holiday, and Sundays, 2 Sundays are there, 4th and 11th. Buddha Purnima, all those are not holidays and all. Okay. So 4th, 11th, 1st, 3 days. So you need to add 3 days after 15th. Add 3 days after 15th, that is 3 working days. 16, 17, 19. So 20th will be taken as the due date for the bill of entries which are filed between 1st to 15th of the May. Suppose if the bill is filed between 16th to 31st of the May, 16th to 31st only 2 days, that is 2 Sundays is there, 18 and 25. So therefore go to next month. Next month, what is the first working day? 2 and 3, add 2 days. So 2 and 3, therefore 4th will be taken as the due date. So next month, first working day excluding the holidays between, so 15th, that is 16th to end of that month. But for the month of March, for this month it will be 31st March. So bill of entry returned for payment from 1st day to 15th day of any month, due date is 16th day of that month excluding holidays. And suppose if the bill is returned for payment from 16th day to any day till the last of that day of the month, due date is first day of the following month excluding holidays. If it is returned from 16th to 31st of March, the due date will be 31st of March. If you cross the due date, you need to pay interest. What is the rate of interest? 15% per annum for every day delay beyond the due date. So this is the two options. Depending upon any of these two options, I need to pay the customs duty. So as an importer, that is what they are telling. Pay customs duty after filing bill of entry. Come back to page number 247. Pay customs duty after filing bill of entry for home consumption, and customs officer shall pass out of customs charge order. If the goods are not cleared for home consumption or warehousing within 30 days after unloading, what will happen? Those imported goods may be disposed of by the custodian, or officer may deposit such goods in the warehouse. That is, we have imported the goods. Those imported goods needs to be cleared within 30 days. Within 30 days, if we are not clearing, customs officer will sell those goods by way of auction. Cleared means what? Either we need to file a bill of entry for home consumption, or we need to file a bill of entry for warehousing. If you are not doing any of these two things, then those imported goods will be auctioned, or it may be kept in a warehouse for a period of 30 days. Again, like that, for how many days it will be kept? 30 days. After 30 days, again they will take a review whether to dispose of or to extend it for a further period of 30 days. Like that, for every 30 days they will take the decision. So if the goods are not cleared for home consumption or warehousing within 30 days after unloading, such goods may be disposed of by the custodian, or the officer may deposit in warehouse for 30 days, and beyond 30 days for a further period of 30 days, commissioner should approve. And this is known as warehousing without warehousing. Suppose if you get a short note question, warehousing without warehousing, so don't think it's a print mistake and all. It is correct. Warehousing without warehousing, like that concept is there, and this paragraph we need to write. Okay. And there is a mandatory electronic payment. Importers under AUO or importer paying customs duty greater than or equals to 10,000 per bill of entry, they need to pay through electronic mode only. Then we have export procedures. You can see here, in case of export procedures, what will happen? First, exporter, person in charge and customs officer. First, exporter will file a shipping bill or bill of export, and he will also give all the relevant records. Based on this, customs officer will verify the shipping bill and check whether any customs duty is payable. If customs duty is payable, will collect the customs duty and pass a let export order. Once a let export order is passed with the exporter, then the exporter will submit the shipping bill or bill of export to the person in charge. Meanwhile, what person in charge should have done? Already he came, he unloaded the goods, now he need to prepare the ship for export. So he need to obtain grant of entry outwards to leave the country, and thereafter the goods will be loaded into the ship. And in case of baggage, it can be loaded without permission, but this step is not applicable in case of aircraft or vehicle, because the concept of grant of entry inwards or outwards is not applicable for aircraft or vessel. And thereafter the person in charge will submit export manifest. In case of aircraft, export manifest is called as departure manifest, and in case of vehicle it will be called as export report. Okay, so you can say this. Compliance to be followed by person in charge. There unloading only at approved place, here loading at approved place. There unloading under the supervision of proper officer, here loading under the supervision of proper officer. There for bringing the goods from the ship to shore, boat note was required, but here for taking the goods from shore to ship with the help of small boats, shipping bill is sufficient, boat note is not required. Loading on holidays and after office hours, MOT charges payable, which is exempted under GST, same, shall obtain grant of entry outwards, and they will file export manifest, departure manifest or export report. Also they will file passenger name record information and shall obtain permission to leave India from the customs officer. So these are all literally replica of import process to be followed. What is the compliance to be followed by the exporter? simple, they will just file the shipping bill or bill of export, and then they will assess the value and pay the customs duty, or they can go for provisional assessment. They will pay the duty if applicable immediately on filing shipping bill. Very, very important, deferred payment facility is not enabled for exporter. It is only for importer, not for exporter, and they shall obtain the let export order for taking the goods out of India. Then we have transit and transshipment. Transit means what? The same conveyance which is bringing the goods to India in the first port is taking it to another port, and it is called as goods in transit. But opposite of it is transshipment. Transshipment means when a vessel is bringing some goods into India, first it will unload the goods in one port, thereafter the remaining goods will be taken to another port or airport, not in the same conveyance but in a different conveyance, that is called as transshipment. You can see here transit means continuing transport in the same conveyance, whereas in case of transshipment, so another conveyance will come into picture, that is called as transshipment. And in case of transit, bill of transit or declaration of transit not required because it is the same conveyance, but here bill of transshipment or declaration of transshipment is required. One of the very important point in this is that, so transit freight and insurance is part of CIF, means while bringing the goods, say Surat port we have imported first, and thereafter the same ship is coming from Surat port to Chennai port. Now whether that freight we will include it for computation of assessable value of goods which are unloaded in Chennai, yes, whereas transshipment freight will not be included, so shall not be part of freight. So this shall be part of freight, this shall not be part of freight. Okay, then continuity and records, yes, in case of transit continuity of records is there, whereas in case of transshipment continuity of records is not there. And in both the ports, first port as well as airport or another port or airport, they need to submit all the details of cargo. That is, this is common point. For example, I am unloading only 40% of the goods, remaining 60% will go to some other port. Even then I have to declare entire information in the first port or etc. In the subsequent port or airport also I need to declare this information. This is about transit and transshipment. Maybe for theory they can ask this question, or if not, application, if you see only this freight part, they will give one line in the question as adjustment. So transit freight to be included, transshipment freight will not be included. Okay. Then import or export in case of post. So post also we can make import or export. When we make import or export by post, keep in mind, so the process will not be tested in exam, but the relevant date for determination of rate of duty usually tested in exam, that is, what should be taken as relevant date in case of import? Usually date of presentation of bill of entry or grant of entry inwards or arrival of the vessel or aircraft or vehicle, whichever is later. Here simple, there is no concept of bill of entry. For post, it is the postmaster will hand over the list of articles to the proper officer, the date on which he handed over the parcel list, that is equated with bill of entry. Then, so date of arrival of the vessel, no grant of entry inwards, date of arrival of the vessel, whichever is later. Another place where we have whichever is later is this, so keep that page. So date on which postal authority present parcel list to proper officer, or date of arrival of the vessel, whichever is later will be taken. In case of imports by vessel, post. And wherever we are referring to post, that also includes courier agency. You can see goods imported or exported through courier are treated on par with goods imported or exported by post. And suppose if it is importing an aircraft or vehicle, there is no whichever is later, only one point, the date on which parcel list is handed over to the proper officer. Then in case of postal exports, whether it is aircraft, vessel or vehicle, it is the same. The date on which the parcel is handed over to the postmaster by us, that date will be taken. Date on which exporter delivers goods to the postal authority will be taken. Okay. Then we have something called as faceless assessment under customs. Again, this can be tested as a theory question. So in faceless assessment, what will happen is that whenever we file the bill of entry, there is an importer who filed the bill of entry. This bill of entry will be given to risk management system. In this risk management system, there will be lot of customs officers who are connected, and they can assign this bill of entry to any customs officer, and that particular customs officer will do the verification of the bill of entry. And what is the advantage of this faceless assessment? It will separate the jurisdictional assessing officer with the assessing officer who will do the assessment of the bill of entry. So not necessary that our jurisdictional officer only will do the assessment, any person can do the assessment. So once they allot it to any customs officer, they will do the customs compliance verification, and suppose if there is any mistake in that, then the bill of entry will be rejected. Again importer need to file a fresh bill of entry. If everything is approved, then the bill of entry will be returned for payment of customs duty. Got it? So you can say this. What are the points you need to remember? Bill of entry that is identified for scrutiny is assigned to an assessing officer who is physically located in a customs station which is not the port of import in the customs automated system. That is what faceless assessment is. Number 2, it separates what? It separates what? Assessment process from physical location of port of import using a technology platform. From importer perspective, is there any change? No change. No change in the process of filing bill of entry. Just these points you write if you get a question on faceless assessment. Then, what are the powers of customs officer? Section 37 and 38, these two sections says customs officer at any time board any conveyance carrying imported or exported goods and remain on such conveyance for such period as he considers necessary. Possible only in case of vessel, not possible in case of aircraft. Then he cannot stop midway and board into the aircraft and all. Section 38, customs officer may require person in charge of the conveyance to produce any document and answer any questions. Then, so we have electronic cash ledger, credit ledger regulations and import of goods at concessional rate of duty. This we will see after a break. Okay. For levy of ASD and ADT from WTO countries, since it can be levied only if there are serious injury, provisional duty will not be applicable. Correct. So in case of imports from member countries, ADT and ASD will not be applicable unless there is a serious injury, which means that only when there is a serious injury after investigation they will levy. So provisional duty will not be applicable there. Then next we have grandchildren come under related. No, grandchildren will not come under related. Then look into this. Electronic cash ledger and electronic duty credit ledger regulations. Electronic cash ledger is for the purpose of any amount that is deposited into this ledger, just like similar to GST, will be used for the purpose of payment of DIPFO, page number 251. Page number 251, amount deposited for duty payment is credited to this ledger and which will be used for payment of DIPFO. In case of GST, it is TIPFO. What is that? DIPFO means duty, tax, duty or tax. TIPFO is tax, DIPFO is duty. Okay, then interest on account of delay in payment of tax or duty, and P for penalty, and O for F for fees, that is late fees for delay in filing bill of entry, etc. O for others. But the balance that is there in electronic duty credit ledger can be used only for payment of basic customs duty. It cannot be used for payment of other things. Even we cannot use it for payment of social welfare surcharge, IGST, etc. also, only for payment of basic customs duty. But cash ledger can be used for payment of customs duty, interest or penalty. Whatever excess balance that you have in the electronic cash ledger, so can be claimed as a refund, unutilized balance. Whereas electronic duty credit ledger, unutilized balance cannot be claimed as refund, but we have a process of transferring the balance of electronic duty credit ledger in the form of e-script to another person. Okay, so basically electronic cash ledger, amount deposited for duty payment is credited to this ledger. It can be used for payment of everything, that is DIPFO, and thereafter unutilized balance can be claimed as refund. But electronic duty credit ledger regulations, electronic duty credit ledger, both are given in section 51A and 51B. So whenever we are claiming any refund upon export, so like duty drawback or any incentive under foreign trade policy, that will be credited to this ledger, and balance in this ledger can be used only for payment of basic customs duty. Unutilized balance cannot be claimed as refund. And we have in this regard electronic cash ledger regulations. whatever deposit that is made in cash ledger shall not accrue any interest because it is not a savings bank account or a FD etc. and all. Deposit challan EOS ECL02 is valid for a period of 15 days. This 15 days is same in GST also, same in GST. So even in GST also this 15 days point is common. So once a challan is generated for making payment, it will be valid for a period of 15 days. What are the various modes of deposit? Either net banking, NEFT, RTGS, over the counter, up to 10,000 rupees in a day. But here, what is the meaning of over the counter? Over the counter means cash or check or demand draft. Whereas in case of GST, there are total 6 modes. Okay. In GST, what are the various modes of deposit? Total 6 modes are there. That is NEFT or RTGS, and next we have net banking. So that net banking is here also, and number 3 we have IMPS, then UPI mode is there, and debit card or credit card, that mode is also there, and number 6 is OTC, that is over the counter up to rupees 10,000 per tax period. Okay, over the counter payment up to 10,000 per tax period. So this we have OTC up to 10,000 rupees per tax period. This is under GST. What are the various modes of deposit? Okay, whereas if you see in customs, it is net banking, NEFT, RTGS, over the counter, only 3 modes. Here over the counter is 10,000, in GST also over the counter is 10,000, but the 10,000 is in a tax period. Here it is in a day, and both the places over the counter means, remember, it is cash, check and demand draft. Then OTC limit of 10,000 per day shall not be applicable to garment department. In GST also that is same, garment department. Upon authorization of customs officer, this point is not there in GST if deposit is made. In GST we have 3 cases. There is no restriction on OTC limit. Number 1, garment department. Number 2, if it is like any recovery proceedings. During recovery proceedings, if GST officer collects any amount, that can be deposited, or during any search proceedings, investigation proceedings, if they collect any money, that can also be deposited. Okay. Then next we have commission or charges payable for deposit shall be borne by the person making the deposit. Of course, the one who is making deposit only should bear. Upon successful payment, a CIN will be generated. In GST also same. In GST there are 2 numbers. One is CPIN and CIN. CPIN is common portal identification number. CIN is challan identification number. Amount in the ledger can be used for payment of duty, interest, penalty fee or any other amount under Customs Act or Customs Tariff Act. Okay. And balance can be claimed as refund, which shall be paid into bank account of importer or exporter. These are all normal points, but this can be asked as a short note question. What are the cases where the provisions of section 51, that is electronic cash ledger regulations, are not applicable? Point number 1, whichever place there is no customs automated system, their electronic cash ledger is not applicable. And accompanied baggage, when the baggage is brought by the passenger, for that also there is a baggage duty. In that case also these provisions of section 51 are not applicable. And making payment of other than tax, other than duties or other than amounts under Customs Act or Customs Tariff Act. What are the amounts which are not payable under Customs Act or Customs Tariff Act but payable by the importer? That is custodian charges to the custodian, and demurrage charges and warehousing charges. These are other charges. For that other charges, definitely we cannot use this electronic cash ledger. So these are the 3 points you need to remember. Mark this as for short note, important. Where customs automated system is not in place, accompanied baggage, making payment other than duties under customs, IGST, compensations as interest fee or any other amount. So that is example, custodian charges, demurrage charges, etc. We cannot use cash ledger. Next, electronic duty credit ledger regulations. So what happens is that whenever you are eligible for any kind of incentive under foreign trade policy or under customs, as soon as you file the shipping bill, so when you file the shipping bill, if you are eligible for a refund, so a e-scroll will be generated and that will be credited to the electronic duty credit ledger. A shipping bill or bill of export presented and having a claim of duty credit under the scheme shall be processed in the customs automated system, and a claim shall be allowed by the customs as per the conditions and restrictions notified for the scheme after filing export manifest or export report, because they need to check whether really the goods are exported or not, then they will create a e-scroll. And once a claim is allowed, a script for duty credit will be generated by the proper officer. So this duty credit will be in the form of a script, e-script, electronic duty credit ledger. An e-script will be generated. Separate scripts will be generated for each scheme. The duty credit available in the script shall be used only for payment of basic customs duty, cannot be used for payment of any other thing, and it will be valid for a period of 2 years from the date of its creation in the ledger, and any duty credit in the said e-script remaining unutilized shall be lapsed. So means after 2 years. So it is not like in input tax credit. Input tax credit, there is no time limit, it can be carried forward for n number of years, but here this electronic duty credit ledger is valid for a period of 2 years, and once it is lapsed, that shall not be regenerated, that is gone. And we can see the details of this e-script in the customs automated system. And transfer of duty credit in e-script shall be allowed within the customs automated system. Means, for example, I have imports, I can use this for payment of basic customs duty on import. What if I don't have imports? Then I can transfer this e-script to some other person, but that some other person should also be an importer having a IEC. So when I transfer that, the other person can take it and use it for payment of his basic customs duty on import. But both should be IEC holders. IEC refers to import export code. Number issued in terms of FTP, and the duty credit available in e-script shall be transferred at any time for the entire amount. Part cannot be transferred, entire script can be transferred. Part or some unutilized amount alone cannot be transferred. So because the entire amount in the said script to be transferred, and transfer of duty credit in part shall not be permitted. Okay. Next, we have import of goods at concessional rate of duty rules for specified end use rules. So first we will try to understand the background when these rules are applicable. Say there is an importer who can import the goods without payment of customs duty, or he can import the goods at concessional rate of customs duty. To that person, these rules will be applicable. So why he is eligible for import without payment of customs duty or at concessional rate? Situation number 1, just remember this example. There is a manufacturer who is making COVID vaccine. For the purpose of making COVID vaccine, he can import the raw material without payment of customs duty. Situation number 2, there is an importer who is into edtech business. Edtech means like the education technology based company. So they can import the equipment which is required for carrying out the edtech business, that is like, you know, this touchscreen boards, etc. and all. Number 3, there is a person who is supplying goods to defense canteen. For that purpose, he can import the goods. So these are the 3 situations. In all these 3 situations, he can import the goods without payment of duty or at concessional rate, and they have to follow this rule. So see the first point, a manufacturer or a service provider is eligible for an exemption notification. For what purpose? To import the goods without payment of customs duty or to import at concessional rate. That imported goods should be used in manufacture of any commodity or provision of any output service. So manufacture or provision of output service, that is except after sale service, are supplied to specified end use recipient. Just these 3 examples you remember, and that person who is manufacturing can do it on his own, or he can get it done on job work basis. However, in case of certain sectors like gold, jewelry, etc., job work is not possible. This is the background of these rules. And what is the process to be followed by that importer? Say there is an importer who is intending to import, he is located in Coimbatore, Tamil Nadu, and the goods are to be imported to Chennai port. First he need to intimate the customs common portal that what goods he wanted to import, and the basic details and all should be submitted in the application. Plus he need to also give a continuity bond with surety or security to the customs common portal. Customs common portal ICGR will verify whether he is eligible for import, and then they will be giving him a number called as import of goods identification number, so for concessional rate, and this number he need to quote in the ACDC of customs in Chennai, so that at the time of filing the bill of entry, when he quotes this number, they will not collect any customs duty from him, or will collect the concessional rate of customs duty. And whatever goods that are received into this factory in Coimbatore, he need to intimate if there is any short receipt, because otherwise the portal will be of the assumption that whatever quantity which he has applied for is being imported. For example, he applied for 10,000 units, but the quantity actually imported is only 8,000 units. The 2,000 units not received needs to be intimated. Intimation regarding non-receipt or short receipt of the goods, and unutilized goods or defective goods needs to be either exported, without payment of customs duty, or it can be sold in India upon payment of customs duty. What is the time limit within which they need to do that? Within 6 months. Now concentrate. Whenever they are importing some raw material, say they have imported 10,000 units, 8,000 units only utilized and 2,000 units are unutilized. What they need to do with the 2,000 units? Either send it back, but when they are sending it back, at least it should be having a value which is more than or equal to the import value. There should not be any negative value addition, because whenever we are importing, we will pay some money. Whenever we are returning the same goods, when we are receiving lesser money, then there is a foreign currency loss to the country. Due to that reason, they have put that condition. Either it should be exported at the same rate or at a higher rate, but it should not be exported at a lower rate. Means there should not be any negative value addition. That is the meaning of that point. Next, otherwise, if you don't want to export it back, then you sell in India. And why you need to pay customs duty? Because initially you did not pay customs duty, so now you pay the customs duty. Should we pay the interest? Of course, yes. We need to pay the interest. What is the rate of interest? 15%. Per annum we need to pay the interest. From which date to which date? From the date of import, because at that time we have not paid. So from the date of import till the actual date of payment of customs duty, we need to pay the interest. So sold in India on payment of duty along with interest. This is the negative value addition point. There should not be any negative value addition. Value of such goods should be greater than or equals to value of the said goods at the time of importation. Then FAQs in this regard, these are some general FAQs. Number one, what is the information to be submitted? Simple. So if I am a manufacturer, which place I am going to manufacture, what goods I am going to manufacture. If I am a service provider, what services I am going to provide. If I am a specified end use, like if I am making sale to specified end use recipient, who is that specified end use recipient, what goods I wanted to import, which port I wanted to import, all those details I need to submit. That is name and address of the importer and his job worker, goods produced or manufactured, nature and description of imported goods, output service, and under which notification, exemption notification I am eligible, the intended port of import, particulars of premises where they are going to do manufacture or transfer, and details of end use recipient. This is one FAQ which definitely will not come in exam, so you don't have to bother. Then what is the procedure for sending the goods for job work? Basic. So whenever we are sending the goods for job work, what is the coverage that should be? Definitely e-way bill is required. Mandatorily e-way bill is required when the goods are sent on job work. One more case also, mandatorily e-way bill is required irrespective of the value. What is that? Handicrafts. Very good. In case of handicrafts and goods sent on job work, irrespective of the value, we need to require to generate e-way bill. And this goods sent on job work is supply or not a supply? Not a supply. Due to that reason, what is the name of the document that is required? Delivery challan. So delivery challan plus e-way bill is required. Generally, when the goods are sent on job work, what is the time limit within which it should be brought back into the factory? 1 year. In case of processed goods, it can be extended for a further period of 1 year. This is the time limit in GST. Whereas here, it is not 1 year, it is only 6 months. So within 6 months from the date of delivery challan. And the person who is sending the goods on job work should report this in a monthly statement. Even job worker shall maintain necessary records. Can the imported goods be transferred from one unit to another unit? Yes, it can be transferred, but that should be under the cover of a tax invoice plus e-way bill, because inter-unit transfer means it's a transaction between distinct persons. So all these details should be reported in the monthly statement, and even that unit also should maintain necessary records. Then what is the procedure for supplying imported goods to the specified end use recipient? Same story, tax invoice plus e-way bill, and the job worker should, that specified end use recipient should maintain necessary records. Even the importer also should maintain necessary records. Can the capital goods be imported under these rules? Yes. So not only raw material, even capital goods also can be imported under these rules, but there is one very important point, that capital goods can be imported and used. That 6 months time limit is not applicable. Generally, raw material which is imported needs to be either exported or sold in India within 6 months if it is not used. But the 6 month condition is not applicable in case of capital goods. Capital goods which are capitalized in the books of the importer can be imported at concessional rate and used in manufacture, and after that it can be cleared in domestic area on payment of duty and interest. At what? At the depreciated value. What should be taken as the depreciated value? So what we need to see is that first we need to count the depreciation based on straight line method only, but that straight line method is for every quarter or part thereof in the first year, for every quarter or part thereof in the second and third year, and thereafter for every quarter or part thereof in the fourth and fifth year, and thereafter, okay, thereafter, that is greater than 5 years. So sixth year and onwards, sixth year and onwards. 6th year and onwards. What is the percentage that you need to remember? So 4% for every quarter or part thereof, 3% for every quarter or part thereof, 2.5% for every quarter or part thereof, and 2% for every quarter or part thereof. Okay, so this should be first year, second year, and third year. First year 4%, second and third year 3%, fourth and fifth year 2.5%, sixth year and onwards it will be 2%. Now how to count this first year, etc. and all? So here calendar quarter only should be taken. We should not take it as 3 months as one quarter, calendar quarter. For example, if it is like 5th of February to 5th of April, 5th of February to 5th of April, if you logically see, it is just 3 months. Okay, so February to March, March to April, so not even 3 months. But if you count the quarters, it will be coming under 2 quarters. Why it will be coming under 2 quarters? Because we need to take the calendar quarter and we need to allow this, and thereafter you will get the depreciable value. On the depreciable value we need to compute the customs duty, and if suppose already at the time of import we paid some customs duty, that needs to be reduced, so the differential amount we need to pay as the customs duty. You can see how to compute the depreciable value in the next page. So how to compute depreciable value of the capital goods and customs duty on capital goods? For every quarter or part thereof in the first year 4%, for every quarter or part thereof in second year and third year 3%, for every quarter or part thereof in fourth and fifth year 2.5%, and thereafter for every quarter or part thereof it will be 2%. And this should be reduced from the value of the imported goods, so we will be getting the depreciable value. On the depreciable value we need to pay the customs duty, and you can see here, so what is the interest rate? Interest rate will be 15% per annum from the date of import of goods till the date of payment. Now I have one doubt, sir, whether this depreciation needs to be computed from the date it is imported or the date it is put to use. Always depreciation put to use, here also put to use. Okay, always depreciation, income tax put to use, here also put to use. From the date it is put to use only it should be counted, but not from the date it is imported. Be careful with respect to that. Both dates will be given. So put to use also will be given, and thereafter imported date also will be given. See, we need to compute interest from the date it is imported, but depreciation should be computed from the date it is put to use. And how much customs duty we need to pay? Customs duty and above shall be equal to difference between the duty leviable on such goods but for the exemption availed and that already paid, if any. For example, at the time of import we paid 5% as concessional rate, but the applicable rate is 15%. Now see what is the depreciable value into 15% minus at the time of import whatever is the duty already paid. So that differential amount only we need to pay now. Got it? Then next one, what is the bond that is to be executed? That is a continuity bond with surety and security. Continuity bond is like, so first we will, it's like a deposit kind of. For 10 lakhs we will execute a bond, and whenever we imported the goods and used really in manufacture of COVID vaccine, means we achieved the purpose. When we achieve the purpose, as soon as we import the goods without payment of duty, say the duty saved is 1 lakh, so the 10 lakhs bond amount will get debited by 1 lakh. Again when we achieve the purpose, the bond will be recredited by that 1 lakh. So that is how continuity bond will work. Continuity bond with surety or security as deemed appropriate by jurisdictional ACDC. So with an undertaking to pay an amount equal to difference between the duty leviable on inputs but for the exemption that already paid, if any. And next, what are the accounts and records to maintain? All the accounts and records, how much quantity they received, how much used in manufacture, how much supplied in specified end use recipient, how much used in services, what is the closing stock, everything to be maintained. Then when the unutilized or defective goods should be exported or sold in India, 6 months, but not applicable in case of capital goods. And they need to furnish a monthly statement. That monthly statement by when they need to furnish, 10th of the month following every month. Then next you can see assessment and audit under customs in that. So self-assessment already we discussed. Look into provisional assessment. What are the situations that leads to provisional assessment in customs? Total 4 situations. Number 1, when the importer or exporter is unable to compute how much is the customs duty that they need to pay, then it will be provisional assessment. In GST also the same point is applicable. When the taxpayer is unable to compute how much GST they need to pay, then it will be coming under provisional assessment. Only first point is common between GST and customs. The next 3 points we don't have in GST. Okay. So these 3 points are there, not 2, 3 and 4. This 2, 3 and 4 is not in GST, but this first point is same in GST. And next one, what are the other 3 cases? where the imported goods, they need to carry out some chemical examination or test, because the cocaine will be compressed in the form of god idle and they will be importing. So they need to do some chemical testing in order to identify whether it is cocaine or not, correct? So for that purpose, they need to do the provisional assessment, and some documents will be asked, but the person is not having the documents. So then also they will resort to provisional assessment, or some documents are required, he submitted, but those documents are not sufficient. Even then the provisional assessment will be resorted. This can be asked as a short note question. What are the situations that leads to provisional assessment? You need to write. Number 1, so when the importer or exporter is unable to determine because of the rate or value. Number 2, where the imported goods requires chemical examination or test. Number 3, where necessary documents are required to be produced but the person has not produced. Number 4, where the required documents are required to be produced but the person has produced it but it is not sufficient. Then, so what happens? You see this is one important point. Importer executes a bond along with security in the form of bank guarantee at the time of provisional assessment, which shall be released upon payment of differential amount after final assessment. However, in case of warehousing, bond executed 2 times the differential duty. Actually, in warehousing already we need to execute one bond, and that bond 2 times the differential duty after finalization of assessment and shall be released after payment of differential amount. Also, for deposit of goods in the warehouse, a bond is executed, that is 3 times the duty payable, and shall be released on payment and clearance from warehouse. So this is something which is confusing, so that's the reason why this may be tested in exam. What is that? Generally for warehousing, there is one bond which is to be executed. How much we need to execute a bond for? 3 times the customs duty payable. And again, under provisional assessment also we need to execute a bond, that is 2 times the customs duty payable. So these 2 points you remember, because again this can be twisted in MCQ. So for provisional assessment, 2 times the customs duty payable, that is a bond, and for warehousing 3 times the customs duty payable. And what happens is that first we are importing the goods and we are going for provisional assessment. At the time when we go for provisional assessment, we need to execute a bond for 2 times the customs duty payable. And what will happen? They will determine this much amount you need to pay like that on finalization. And when we deposit the goods in the warehouse, so which means that 2 times the customs duty payable bond gets released, and again we need to execute a new bond for 3 times the customs duty payable, because when we deposit the goods in the warehouse, we are not going to pay the customs duty. So that is this. So importer executes a bond, up to this you understood. However, in case of warehousing, bond executed after finalization of assessment and shall be released after payment of differential amount. Also, for deposit of goods in the warehouse, a bond is executed 3 times the duty payable, which means whether both the bonds are applicable, of course both the bonds are applicable, and shall be released on payment and clearance from warehouse. First bond will be released whenever we pay the differential duty, second bond will be released whenever we really clear the goods from the warehouse upon payment. Okay, so that is about these 2 bonds. And next, customs finalization of provisional assessment regulations. As soon as the order for provisional assessment is passed, they will be intimating the importer to furnish the documents within 15 days, and the importer has to submit the documents within 15 days. It can be extended for a further period of 30 days, 3 months by customs officer and plus 3 months by ACDC, and any unlimited time by commissioner. Within this applicable time limit, if the documents are produced, no issue. The date on which the documents are produced, from that date within 2 months plus 3 months, the final assessment will be completed. If the documents are not submitted, for submission of documents there is a time limit. Now what is the time limit? 15 days plus 3 months plus 3 months plus any unlimited time by commissioner. Then on expiry of the time limit, from there within 2 months plus 3 months, they will do the final assessment. Documents submitted within 2 months from the date of receipt of documents, the final assessment will be done. Document not submitted within 2 months from the time allowed for submission of said documents, the final assessment should be done, and this 2 months can be extended for a further period of 3 months by commissioner. And upon finalization of assessment, 3 things can happen. Final assessment amount is greater than provisional assessment amount. So then what we need to do? We need to pay the differential amount along with interest. What is the rate of interest? 15% per annum. From which date to which date? From the first date of the month in which provisional assessment is resorted. For example, if the provisional assessment is resorted on 28th March, means we have imported in the month of March, and somewhere 28th March only provisional assessment is resorted. We need to count the interest from 1st of March. So differential duty 15% per annum from the first day of the month in which the duty is provisionally assessed till the actual date of payment of difference. First day of the month in which duty is provisionally assessed. Goods cleared for home consumption or exportation, differential duty payable. Goods cleared for warehousing. So after finalization of assessment, we are depositing the goods in the warehouse. So then we need to execute a bond for 2 times. But sir, 3 times na sir, yeah, that's what I told. Both the bonds needs to be executed. One for 2 times the differential duty. This is because you have not done the provisional assessment, final assessment, and another bond for 3 times the duty, because that is a normal bond which you need to execute for the purpose of depositing the goods in warehouse. Whether both the bonds needs to be executed, yes, which means 5 times the customs duty payable we need to execute, yes, correct. And but when it will be released, this bond will be released when you pay the differential amount. That bond also will be released whenever you pay the full customs duty and clear the goods from the warehouse. Then suppose if the final assessment equals to provisional assessment, provisional duty is adjusted towards the final duty payable. If the final assessment amount is less than provisional assessment amount, what will happen? Then in that case we have paid them excess amount, that excess amount we can claim as a refund. So we will make an application, but here the refund will be computed, interest will be computed at the rate of 6% on expiry of 3 months from the date of application or from the date of final assessment. From the date of final assessment, not from the date of application. Usually the interest under customs will be 6% per annum on expiry of 3 months. You please go to refunds chapter. In the refund chapter you can see one section, that is section 27A. In that section 27A, time limit for granting refund 3 months from the date of application for refund. So whenever you make application for refund, this is in page number 274. Whenever you make the application for refund, within 3 months if they are not granting, then interest will be payable at the rate of 6% per annum for the period beyond 3 months. This is one point, okay. Whereas in case of provisional assessment which is getting finalized, so at that time the interest will be computed, but that interest will be computed in a different manner. So within 3 months after which date? Final assessment, finalization of assessment, not the date of application, from the date of finalization of assessment, okay. If not refunded, then interest will be at the rate of 6% per annum, okay. So remember, from the date of finalization of assessment. Then refund of differential duty upon final assessment is subject to unjust enrichment. Unjust enrichment means we need to prove that we have not transferred the burden to the next person. If we fail to prove, then it will be credited to consumer welfare fund. So here also maybe provisional could be 12%, so we have paid 12%, and final is 18%. No issue, we have to pay the differential amount. What if the provisional is 18 but the final is 12, means 18% we paid, so we are claiming 6% as refund. So we need to prove that we have not collected 18% from our customer. So that is this. If the burden is already transferred, then the amount to be refunded is transferred to consumer welfare fund. And provision assessment is applicable for both imports and exports, and any contravention of these provisions, what is the penalty? Up to 50,000 rupees. This is about self-assessment and provisional assessment. Then look into audit under customs. Audit under customs, we have post-clearance audit. Post-clearance audit, wherein at the time of import there won't be any audit, but at a later point of time customs department will be telling us so to submit the records, and either the audit can be carried out at their place or they can do the audit in our place. Post clearance audit, structured examination. What is that they will examine? They will examine everything. They will examine commercial systems, and they will examine sale contracts, financial and non-financial records, then physical stock and other assets. So even they will check the bank statements, everything, to measure and improve compliance. And where the audit will be carried out, either at the premise of the auditee or in the office of the officer. So anywhere they can carry out. And who is auditee? Auditee is importer, exporter, custodian, even warehouse keeper can be audited, customs broker, clearing and forwarding agent, or any person dealing with import or exported goods. Any person books can be audited. In this regard, we have customs audit regulations. What is the period for which we need to preserve the accounts and records? In GST, what is the period? 6 years. 6 years from the due date of filing annual return. You write down there. So in GST, 6 years. 6 years from due date of filing annual return. From due date of filing GSTR 9. 6 years from due date of filing GSTR 9. That is the time limit for which we need to maintain the accounts and records for a particular financial year in GST. But in customs, it is not 6 years, it is for a period of 5 years from the end of the financial year. For financial year 2024-25, we need to maintain for 5 years, that is 25, 26, 27, 28, 29, 30, up to 25, like 2030. 5 years we need to, but in GST it's not like that. Same financial year 2024-25, first you see what is the due date of annual return, 31st December 2025. From there you need to count 6 years. And how it should be maintained, it may be either manual or electronic, and make available the records to the proper officer as and when demanded. Even GST same. And selection of auditor documents based on risk parameter basis, not that every time they do the audit, whichever person they wanted to do the audit on risk parameter basis they will do. And auditing can be conducted at auditor's premises. A 15 days notice to be given, so 15 days notice in GST it is 15 working days notice, okay. In GST it is 15 working days notice, 15 working days notice. In customs it is 15 days, whereas in GST 15 working days notice. Or the audit can be conducted at the proper officer's office. CA/CMA can be appointed for assisting. So this audit is not done by chartered accountant or cost accountant, but they can assist for conducting the audit on prior approval of commissioner. And again, contravention of provisions, what is the penalty? Up to 50,000. And what are the two types of audit? There are two types of audit, that is transaction based audit and premises based audit. Transaction based audit means list of bill of entries or list of shipping bills. They will be asking to submit the records. Means first we entered into contract copy. Thereafter you would have placed the purchase order, that purchase order copy. Thereafter how they are sending the goods, in which shipping company they are sending, and when these goods are received, and how we have transported these goods, in which factory these goods are received, like that in depth. This is like what? Sampling in audit. So we will take a sampling and we will do audit in depth and identify if there is any contraventions, then we will do audit of everything. Got it? Like that. First they will take transaction based audit where selected transactions are audited, and premises based audit where all the records and systems will be audited. Then this interest on account of delayed payment, already we saw in self assessment two options, immediate payment, deferred payment, and to whom this deferred payment will be applicable. Class of importers, I told you authorized economic operators or some importers will be eligible for this. Class of importers who can avail this facility will be notified, and they are authorized economic operator scheme, and whomsoever wanted to opt for this facility and they are eligible, they will make application to the officer, jurisdictional commissioner, and duty to be paid by the due dates already we discussed. And this is important point, if there is any default in payment by the due date more than once in 3 consecutive months, means in 3 consecutive months how many due dates are there total? 6 due dates will be there, because monthly twice, which means in 3 months there are 6 due dates. If you miss more than once means twice, in 3 consecutive months, this facility will not be allowed unless the duty with interest is paid in full. Also this facility is not available for goods not declared in bill of entry, that is for smuggled goods and all. Don't go and tell, sir I want deferred payment of duty, they will not give, okay. Then duty payable on account of reassessment or provisional assessment. So whenever they do reassessment or they do provisional assessment, we need to pay the reassessed duty or provisional assessment duty. What is the time limit for that? 1 working day. 1 working day excluding holidays from the date on which bill of entry is returned by the customs officer. So bill of entry is acknowledged, or the reassessment bill of entry is passed, or provisional bill of entry is passed, from the date within 1 working day we need to pay, otherwise interest will be payable at the rate of 15% per annum for every day delay. Suppose if there is any finalization of assessment, so differential duty that just now we discussed at the rate of 15%, no time limit, every day delay lead to interest cost, 15% per annum under section 18 from the first day of the month in which duty is provisionally assessed till the date of payment. So this is about the procedures under customs.